Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, March 25 to March 29, 2019. Story in the COM dollar land is that they actually held up, I think, relatively well relative to the majors, but still very much seeing that risk-off sell-off as we saw at the end of the week, with Aussie and Kiwi holding bid and dollar CAD actually having its own very much idiosyncratic move to the upside, with meaning the loonie really taking a big hit to the downside. Aussie now, I think the critical thing with Aussie, absolutely no doubt, is the 70 handle. That's where all the eyes are going to be. This is really where the front of the week will be. The market is going to pretty much reflect whether it feels truly concerned about China slowdown, trade tensions, risk off, spreading all across the world, because that 70 is going to be the key area that the shorts are going to try and probe. 70-50, of course, will be the first area that they're going to try and probe, but that's going to be, I think, the major area of focus and concern. If they can hold for the whole week, that actually will be very bullish. The whole risk high beta complex. Dollar CAD, its own story, really looks much stronger on the dollar side than all the other commodities. It is on the teetering edge of taking out the 34.50, which really pushes us to fresh or to test the near-term swing highs at the 36s. And Kiwi very much holding bid. Actually showing a little bit of relative strength against the Aussie as well. That 68 becomes the very big support level as we go forward. The data set, as we talked about, I actually talked a little bit about the Kiwi data set in the majors. Totally forgot that I should have discussed that now, but I'll review it again in case you didn't see the other video, the majors video. The big story on the COM dollar land is the RBNZ official cash rate. That's going to be the central event Wednesday to you guys, Tuesday night to us guys. Here, the primary focus is, as I said in the earlier video, neutral is the new hawkish. If the RBNZ does not hint that in any way, shape, or form it will decide or be open to the idea of lowering rates into the second half of the year, if they say the economy has not deteriorated, and the economy has not, the data out of New Zealand has been relatively good, but it doesn't mean anything because, as we know, the central bankers right now are erring on the side of caution. So if they hint in their conversation and in their presser that they are thinking of that the risks to the downside are tilted to the downside more than to the upside, just that change in language alone could really push the Kiwi below the 68s, as everybody will begin to anticipate that they're open to the idea of maybe 25 basis point cut to the downside the second half of the year. If they don't, that actually I think is bullish, takes us all the way through the 69s, may even challenge the 70s if we have a strong comeback in sentiment as the week progresses, because the whole idea here is that if RBNZ keeps rates bid at 175, it still is one of the more preeminent carry trades in the market space. The other big event on the COM dollar land is going to be all Canadian data at the end of the week, with CAD GDP coming in at the end of the week, and CPI data. And here we're going to just sort of see how bearish the Canadian economy has become. And I actually think, we're looking at all the preliminary data. As you can see, Kathy is very negative, the data set. And if the GDP numbers come in negative, that only exacerbates or confirms the fact that the BOC has to stay stationary. It may even open up the prospect of BOC reversing its hawkish stance and actually suggesting they may have to begin to cut rates. All of that, I think, puts further pressure on dollar CAD and may take us through the higher levels. So let's take a look at the charts here and see how the charts are setting up for all the COM dollars. So let's take a look at CAD first, because that's really the most idiosyncratic of all. And CAD is by far the weakest, and therefore dollar CAD is the most bullish structure here. Not only do we hold the 20 SMA, we're pulling away here. The challenge is going to be the 36.50, 36.60. We clear that level. That puts us square up onto a move towards the swing highs at the 36.50 level here. So technically, this looks very bullish. We bounced off the SMA. We're starting to push higher. Oil prices started to collapse a little bit on Friday, and if we start to oil in many ways now is as much a symbol of risk off as anything else, because oil coming down in price is a signal to the market that industrial demand, capital expenditures, basically all of the global economy is actually going to slow down. So if the specs are going to start taking it down to 55, you can be certain to see fresh multi-week highs in dollar CAD here through the 36s, through the 34.50s towards the 36s. That's I think in many ways the most obvious technical trade here. This is certainly the most bullish trade here. As I said, dollar CAD is notorious for doing one step forward, two steps backwards. But given the fact that when CAD actually catches a trend, that trend tends to be very sticky. And what you're seeing here is, if you look at the prior analog here, here's a trend. It holds the bid. We have a little bit of a retrace. We have big moves up, and then it still continues to essentially hold the bid around the 20 SMA. So to me, follow the SMA here. As long as CAD does not close below the SMA for 2 days, it doesn't violate the trend for 2 days, it is very much a buy to dip type of story. You may not want to chase it at these levels, but if it comes back down to the sort of 33s, 33.50s around the SMA, it's certainly going to be a good place to put your entry. The hard stop, in my opinion, 3,200. You just got to give yourself a lot more room because CAD is so notoriously choppy. But underneath 3,200, that kind of breaks the whole follow the SMA trend. But for now, to me, this is by far the most interesting of the calm dollar trades. The next most interesting trade is this one. It's a lower volatility trade, but look at this reversal. Boom, boom, boom. Series of lower highs all the way down. Long-term trend starting to the downside. We're closing below the 20 SMA here on the lows. The big story that everybody's going to be watching is, as I said, the 70 handle. This is right here. Before that, of course, the 70.50. If we close through the 70.50 on Monday, that will be a very strong signal that the shorts are really going to want to try to press us to the downside. That means we're going to exacerbate the sell-off flows. Look at the Dow. Dow starts to shave 500 points off the move, so that means the Dow now goes below 25,000. A big psychological factor. All of that just tugs at us like a magnet, or like gravity, all the way down towards the 70 handle. And here's the Kiwi. Kiwi, of course, has its own idiosyncratic risk this week with the RBNZ, but Kiwi also essentially triple topped at the 69.50 level, coming back down, not as weak as the Aussie, still staying above the 20 SMA. And maybe in many ways, this is the other interesting thing. If you sort of, I guess my view is, if you're trading relative strength, and you sort of bet that if you sort of, your contrarian view is that all of these risk-off worries are just short-term temporary wobbles. The market rights itself and actually starts to resume the risk-on trade. Then Kiwi is your man, because if the RBNZ comes in neutral, therefore hawkish, Kiwi holds above the SMA here, then the flows back up could really re-challenge us back to the 69.50s. So on a contrarian basis, Kiwi is a certainly relative strength trade. On the other hand, we start breaking down below the 20 SMAs. I think it just follows everybody else down to the downside now, and then only 67.50 becomes the next tier near-term support. So overall, I think front of the week still looks negative commodity dollars. Amongst those, you really have to watch Aussie as the hawk to me, because Aussie is the barometer of risk right now. And I think the market is going to be very much fixated on the 70.50 first, and of course 70.100 as the critical level. All of that primarily being driven by these key things. Watch oil, watch the Dow or the S&P, but I would watch just simply the Dow, is just simply a near-term proxy, and watch the 10-year. If the 10-year in the US compresses down to like below 240, which we haven't seen in ages, all of that just signifying massively risk-off flows that are going to translate into downward action in the calm dollars. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.